Good morning, everybody. This video is just one revolving chart basics. I'm aware that some of the guys in the mentorship has got some good knowledge about charting, but then we have guys that has got very limited or almost nothing. This video is just there to wrap the basics of what a chart is. This is important to know. So not everybody have to listen to this, and in my email that I'll send, I will list which guys I think need to watch this video. But all right, so main thing is everything that we do as technical traders revolves around the chart. So we'll be staring at charts and different variations of charts all day long. Well, hopefully not all day long. Hopefully that elusive 3 hours a day of working. So what is a chart? A chart is a price representation of a financial instrument. That's the Google jargon if you go Google. It's a price representation of a financial instrument. That financial instrument being any instrument that has been listed on the stock exchange. And that being the stock exchange locally or anywhere in the world. Now, the beauty of electronic trading is that we have access to any one of these platforms in the world. So you can literally trade anything in the world. You can pull a chart of any listed financial instrument in the world. And when I say an instrument is something we refer to as just something that we can trade. It is not as simple as just shares. In other words, let's say Sanlam shares. We can trade multiple different kind of things. You can get charts of multiple different kind of things. So number one, shares, yes, you can get shares, the data and the charts on shares, commodities, gold, silver, platinum, banking industry, cryptocurrencies, forex, and the list goes on. So first of all, let's have a look at a chart. Let's go to our, you guys watch the previous view, we go to Market Watch. Let's just go and grab one of them. It says this Telkom SA. We add our chart. So that's a default view of Telkom SA. So there's three different kinds of charts, three different kinds of ways that the price representation can be presented. By default, MT4, MT5 loads a chart that's got bar charts. Now, I haven't traded in bar charts in 14 years. Never used it. Read a little bit about it. It's old school. There are some traders in the world that still uses it, but I've never, ever used it. Candles destroyed all the old Western charting systems. So this was as close as the West could get to candles. But anyway, so you get bar charts, then you get candles, which looks like that, and then you get a line chart, which looks like that. Now, each one of these represents exact same data, just in a little bit of a different way. The most simplest one is a line chart. Your most complex one is your bar chart, of your candle chart, and then bar chart. All right. So price movement. What is price movement? Price movement is the movement of a financial instrument, of a movement of an item. It's price. In other words, in the morning, the market's open and somebody starts trading Telkom. Telkom has an opening price. So the first guy that wants to buy is going to buy Telkom at a specific price or sell Telkom at a specific price. And as the day go on, traders are buying and selling. Prices going up, prices going down. So that going up and that going down, that's the price movement. And that is recorded in a chart. So the charts, at any given moment, we can see what was the price opening, during the day, closing. And the charts gives us that analysis. All right. We are only going to use candles. Right. I know of very few, well, actually, I don't know of any trader in the world that uses any other formats of charts, except maybe bar charts. Line charts not being used, maybe to spot divergence, but I mean, divergence is easy to spot in candles. So let's have a look at our candles. Now you'll see they are ugly green and white with a green border. You can change the color as much as you like. All right. So I'm just quickly going to go to templates. Once again, if you looked at your previous video that I sent, I'm just going to remove all the instruments all the indicators off here because we're not going to use that now. It's going to confuse us. So here's it. The reason I call it candle, it looks like a candle, like a little stick with a little wick at the top. So charts, price representation of a financial instrument, in this case, Telkom. So why are there so many candles, you may ask? Well, each candle represents a time period. So we go up here, we say day. D1 stands for day. That means each one of these candles represents one full day. In other words, when the market opens and when the market closes. All right? So we go to a candle. A candle is made up of a body. And then you'll see it's got small little lines at the top and the bottom. We call them the wicks. So a green candle is when the price is going up. And a red candle is when the price went down. So if we look at yesterday's candle, this last little big candle, the price opened at 5,649 Rand. The price closed at the end of the day at 5,448 Rand. So it's the opening when the market opened at 8:30, 5,006 when the market closed at 5:30, 5,400. So the price reduced in that day. And what does this little lines or wicks mean? Well, that means during that day, the market traded at that level, but didn't close at that level. So let's say at 1 o'clock in the day, 5,414, that's how low it went. But then it retraced back. And at the end of the day, when the market closed, the final price of the instrument was 5,451. All right, so that's the form. So as you can see with the candles, they get all kinds of shapes. Here, look at this one here. And we're going to go into depth when we get to the technical analysis about candles, their shapes, their formations, what they mean, etc., and how to use it. This long line, you see, this is a very long line at the bottom. We actually call that a hammer. So opening price there, closing price there. But during the day, the market actually fell down to that price level and then all retraced back. So opening price, let's do this green candle here. Opening price was 5,300. Closing price 5,338. It also traded as high as 5,567. And it traded as low as 5,270. Each one of these candles is a day. So if I want to go see on the 9th of April, what did the market do? What was Telkom's price? Then I can go and look at that candle. If I hover over that candle, it's actually going to see, hover. Should be pulling up the price. Just hover with it. There we go. So you hover over the candle in MT5 Global Trader software. It gives you the date, it says you the price opened, the high, the low, and the close of that candle. All right. So that's a day. But what we can also do is we can break it up into different time frames. So we can say, okay, I want information where each candle doesn't represent a day. I want to see each candle being 1 hour. For instance, this final day, yesterday, can be broken up into, okay, we're starting at 8:30, so it's 9, 10, 11, 12, 1, 2, 3, 4, 30. It's about just over 8 hours of trading. So if we go and say, I want to view that in an hour, then that should give us 8 candles. So if we go here, and then you can see at the bottom, we see the dates. And there they are, 8 bars. So from here to there was the full day. So this was the opening candle, opening price. Telkom moved radically down and then moved sideways like this, and it closed the market up there. All right. So you can take a time frame like daily, you can move the time frame down to 1 hour, and the only thing it actually does is, let's call it unzip. It takes that candle and breaks that candle up into multiple candles. So you just have more candles on the screen. More about why that is later and why would we want more candles. So multiple time frames. This goes down to as far as 1 minute. And as you can see, the smaller your time frames are, the noisier. Up, down, smaller, bigger candles, the noisier the chart gets. The bigger you go up in your time frame, the less disruptive your look at how clean and beautiful is weekly. And then obviously we go down to monthly, which is a final, and then suddenly it just gets cleaned up. So that is different time frames. Opening, closing, price movement. So what kind of instruments do we get, guys? It's not important to really know that, but the instruments or financial instruments that we're going to go trade is indexes, single stock future indexes. In our case, it's the ALSI, which is the South African market. So, although we can, let me just go here, markets. Sorry. Okay. Though we can open any stock and share that's been listed, in this case we call them CFDs, single stock CFDs, contract for difference. We'll talk about that maybe a little bit later. You can also trade forex pairs. We can go and find commodities, which is gold, silver, platinum. So you have multiple different instruments that you can trade. All of them, price representation of that instrument, all of them you can long and you can short. All right. Now, a trend. In trading, we call the trend your friend. All right. Very, very important thing, a trend. Because as swing traders, the trend is where we make our money. The most difficult thing to do is to trade when there is no trend. Now, what is a trend? The trend can either be up or the trend can be down. When it's up, we call it a bullish trend. When it's down, we call it a bearish trend. So this you can see a clearly an uptrend, and here you can see clearly a downtrend, and here you can clearly see it was just a sideways trend. So what makes it a trend? Let's go to a trend. A bull trend is when the market is making higher. So you see it went up, made a high, it retraced, didn't make a new low, like it didn't take out the previous low. It went up again, made a new high, pulled back, made a low, but didn't take out the previous low, went up again, and now it seems like we're going into a sideways roll. It's oops, let's just zoom that a little bit out. So that's an uptrend. Okay, here we can see it was sideways. Then we took out the previous pullback of this low, which then signaled, hey, this downtrend that made a new low, pulled back, couldn't make a new low, and then busted that. That downtrend was destroyed. So this little swing here signaled the end of that downtrend. So this downtrend, we went down, pulled back, lower, pulled back, lower, pulled back, low, pulled back, massive low on a long candle, but then moved sideways, couldn't make a new low, and it broke the previous pullback low, and it was a bull trend thereafter. Very simple. Trends are important. They are the ones that we're going to trade. So recap, charts is a representation of the price movement of an instrument. Each candle is a specific time period where that candle is going to open and a close price, a high and a low. We've got trends, an uptrend and a downtrend, bull or bear. Uptrend signified by higher highs, lower lows. Lower, and a downtrend is signified by lower lows, and a sideways trend is signified by running in a range. No new highs, no new lows. It's just all over the place. And that's it for now.